Welcome to this explainer. Look, the rules of FinTech product management are literally being rewritten overnight. Today, we're diving into how AI is fundamentally reshaping the role of the product owner. We're talking about a massive shift from just, shipping features to deeply understanding systemic risk, compliance, and leveraging artificial intelligence just to survive in this space.
Okay, let's start with a core truth that is completely defining the tech landscape right now. AI is absolutely coming to expose the weak links in product teams. But the wider industry consensus is even sharper. AI won't replace product owners, but POs who leverage AI will absolutely replace those who do not. Using the excuse that you're just drowning in tactical busy work? Yeah, that just doesn't fly anymore.
So here is our roadmap for surviving this Agile 2.0 era. First, we'll look at the legacy banking trap, then the evolution of the product owner, AI-driven agile delivery, mastering risk and compliance, and finally, the AI-empowered strategic leader. Let's get right to it. Part 1, the legacy banking trap. To understand exactly where the product owner role is headed, we first have to talk about the massive 40-year-old technological anchor weighing down traditional institutions. It's honestly wild when you look at the numbers. Traditional banks are practically bleeding capital just to keep the lights on. Think about this. It costs a neobank around £20 to onboard a new customer, but an incumbent bank, they're burning closer to £150 for that exact same customer. That huge pound-per-pixel discrepancy means that for every single successful startup scaling up, traditional banks are losing ground they just cannot afford to lose. And the reality is, your technology stack dictates your velocity. Incumbents might throw a little office party for managing one successful release a quarter on their massive legacy architecture. Meanwhile, neobanks running on cloud-native APIs are deploying tens of production releases every single day. You literally cannot match the real-time reliability and personalization of modern fintechs if your foundation is, well, effectively a digitized ledger from the 1980s. Which brings us to part 2, evolution of the product owner. As all that underlying infrastructure shifts, the person managing the product roadmap has to change their mindset completely. We are officially dead-ending the old feature factory approach. Back in 2022, you might score a promotion for a slick UX tweak that bumped your net promoter score up by a couple of points. Today, the focus has shifted entirely to failure containment and incident postmortems. I mean, if your shiny new one-click savings feature triggers a regulatory compliance nightmare, like a UDEP violation for instance, internal audit will absolutely nuke it from orbit. You don't just own the roadmap anymore, you're stewarding it through layers of intense control. Walk me through how your last feature touched the balance sheet. Seriously, if you're interviewing for a FinTech PO role today and you stumble on this question, the interview is over. Hiring managers desperately want financial system literacy. A money transfer is no longer just a fun user journey on a mobile screen. It's a super high-stakes sequence of hold states, reserve allocations, and foreign exchange triggers. Moving to part 3, AI-driven agile delivery. Let's look at how AI actually builds the ultimate bridge to help product owners meet these crazy new demands. AI isn't just some buzzword to throw around in stand-up. It is your literal escape hatch from tactical busy work. Imagine using natural language processing to automatically draft user stories straight out of scattered Slack threads, or having machine learning optimize your sprint planning based on your team's real velocity data, and even run predictive risk management to flag delayed projects before they even stall. This is what the active implementation loop of Agile 2.0 looks like. By offloading all that manual labor, you essentially get an AI co-pilot. It analyzes product usage, validates your hypotheses using actual behavioral data, auto-generates acceptance criteria, and runs predictive risk modeling. And what does that do? It frees up your human intellect to focus entirely on cross-functional leadership and the really complex, heavily regulated battlegrounds that we're about to jump into. Part 4, mastering risk and compliance. Because once that tactical delivery is automated, this is where you actually prove your worth to a financial institution today. Operational and risk KPIs have completely cannibalized vanity metrics. Take customer acquisition cost, for example. It is structurally higher in fintech because you absolutely have to include KYC and AML compliance, which can easily run up to $25 a head on its own. A simple $40 acquisition cost instantly balloons well past $80 or even $120 when you factor in onboarding funnel failures and fraud. These are the operations and risk metrics a modern PO just has to obsess over. 5 to 20%. That is your target window for anti-money laundering alert to conversion rates. AMO compliance is a massive operational cost driver. Think about it. If your system flags way too many false positives, your analysts are wasting hours basically chasing ghosts. But if you can hit this 5 to 20% window, it means your AI-augmented models are tuned perfectly, balancing risk without creating a massive operational bottleneck. Plus, we are moving incredibly fast from forgiving 24-hour batch reconciliations to under 1-hour real-time settlements. Operational latency is now a direct customer experience failure. With instant payment networks like FedNow rolling out, a delay of even a few hours is going to generate massive customer complaints. Your job as a PO is to help your organization survive this highly sensitive transition. Finally, part 5, the AI-empowered strategic leader. How do all these elements actually combine to create the ideal product leader? Let's check out what the market is demanding. The hiring data speaks pretty loudly here. 62% of hiring is intensely focused on payments and KYC infrastructure. That absolutely dwarfs the 23% aimed at simple consumer-facing UI features. This isn't just a bet on explosive consumer growth anymore. It's a desperate hedge against systemic risk. Regulators are knocking, and institutions desperately need POs who can rip out legacy systems and install compliant, real-time infrastructure. Traditional tech PMs optimize for engagement. FinTech PMs optimize for survivability. That is the mindset shift right there. Your mandate is to grow user value while strictly minimizing the surface area for regulatory penalties. Proposing a seamless one-tap international transfer sounds great on paper, but if you don't map out the tiered verification to cap your AML exposure, that product is dead on arrival. You have to be the ultimate translator. By leveraging AI to ensure flawless control documentation and audit trails, you are the one bridging the gap between legal's strict no-exposure mandate and engineering's reality of a 6-month build time. You aren't just managing a backlog anymore, you know? You are managing the entire ecosystem. So, the big takeaway here is simple. Your value is no longer in writing tickets, it's in your financial literacy and your deep grasp of systemic risk. By fully embracing AI as your operational engine, you free up your mind to focus on strategic alignment and continuous product discovery, ensuring your digital product interacts flawlessly with the broader financial system. It is a high-stakes landscape out there right now. So, you have to ask yourself, are you still just grooming a backlog? Or are you ready to leverage AI and actually lead the fintech evolution? The tools are here. The market is crystal clear on what it values. And honestly, the choice is yours. Thanks for joining me for this explainer. Now get out there and build the future of finance.